let's jump right in. Welcome to this deep dive explainer on our featured report titled AltaGas Stock Analysis, Overvalued or Still a Long-Term Buy from Save Invest Compound. Now, if you follow the energy infrastructure space, you already know AltaGas is a massive player. But today we're cutting through all the market noise to answer one absolutely crucial question. At its current price, is AltaGas a value trap or is it a genuine long-term buy? We're going to look strictly at the numbers, the true business fundamentals, and the underlying value to figure out where this stock actually stands.
We've got a super structured breakdown ahead of us today. We'll kick things off with a quick business summary, calculate the intrinsic value, stress test the company's risks, map out a few future scenarios, and then, my favorite part, give you the exact actionable target prices before we lay down our final verdict. Let's get to it.
Section 1. Business Summary and Deep Dive. Let's start by getting a solid grip on what AltaGas is, and more importantly, how they actually bring in the cash.
So fundamentally, AltaGas operates as a really solid North American energy infrastructure company. Look, these guys aren't wildcat drillers making crazy bets on the next big oil strike. They are essentially a giant toll collector. They leverage highly valuable utility assets and massive export infrastructure just to move energy from where it's produced to where it's needed. And honestly, that provides a really nice baseline of stability that income investors totally love.
But, every stock has two sides. The investment thesis here is honestly a massive tug-of-war. On one side, the bull case champions those incredibly stable utility cash flows, the potential for big export growth, long-lived assets, and of course, that super reliable dividend income. But man, the bear case is heavy. We are talking about high debt, pretty weak free cash flow, massive capital intensity just to keep the lights on, and right now a very, very limited margin of safety.
It's wild how perfectly the company's operational competence contrasts against its financial realities. I mean, the positive observations are great, right? Stable revenue, consistent dividend payments, asset expansion, steady EBITDA growth. Management is clearly hitting the nail on the head with operations, but those wins are offset heavily by elevated leverage, moderate shareholder dilution, and weak free cash flow generation. Those negative factors are serious anchors on this stock's ability to compound wealth for us long-term.
Section 2. Intrinsic Value and Valuation Reality Check. With the business model laid out, let's move over to the math and see what AltaGas is actually worth on paper.
Okay, this is where the rubber meets the road. At the time of this analysis, the current market price is sitting right around $51.51 Canadian. But check this out. When we run a discounted cash flow model, we only get a value of $45. Using a multiple expansion value approach, we get $48. So here is the crucial takeaway. With an average intrinsic value of $46.50, the stock currently lacks a margin of safety. Actually, scratch that. It has a negative 10% margin of safety. You are literally paying a premium for that utility stability right now.
Section 3. Stress Testing Risks, SWOT, and Risk Scores. To truly understand why the market is pricing it at a premium and the hidden dangers of paying up for it, we need to rigorously stress test the business.
This totally illustrates the internal conflict we were just talking about. On the opportunity side, utility cash flow stability provides a massive 1.60 boost to the score. Combine that with their export infrastructure, and you've got a really solid foundation. But the risk side drags it down hard. High leverage and negative free cash flow severely pull the overall score down. When all the dust settles and the math is done, we're left with a fairly mediocre total weighted score of just 5.95 out of 10.
Now, when we strip away the strengths completely and isolate just the risks, AltaGas scores a 5.7 out of 10. So what does this mean? It indicates moderate risk constraints. It's definitely not a catastrophic risk of bankruptcy by any stretch, but it absolutely means the company has financial hurdles that limits its overall flexibility.
Breaking that risk score down even further, you can see exactly where the real pain points are. The highest vulnerability here is the business model risk, sitting at a 7. And this is largely driven by the sheer capital intensity of the energy infrastructure space combined with rising interest costs. Think about it. When you have high debt and interest rates tick up, it takes a serious bite out of your profitability.
Section 4. Future Scenarios, Bear, Base, and Bull. Let's see how these specific risk factors build into potential future valuations depending on how the macroeconomic winds blow.
We ran 3 different scenarios here. Our base case, as we discussed earlier, lands at $46.50. But look at the extremes. In a bull scenario where interest rates drop, exports boom, and free cash flow rises, this stock could realistically soar to $62.
However, if we enter a bear market with persistently high rates and weak export demand, that heavy debt load could crush the valuation all the way down to $34. That downside risk right there, that is exactly why we demand a margin of safety.
Section 5, Target Prices, the Action Plan. All right, we've reached the most actionable part of this explainer. What exact prices should you be targeting based on your own investment goals?
Setting expectations is just absolutely crucial. Let's say your goal is to compound your wealth at a robust 9% annualized return over a 16-year holding period. To pull that off with AltaGas, factoring in their growth, dividends, and current valuation, mathematical discipline dictates a maximum buy price of $38. Paying today's price of over $51 essentially guarantees a much lower annualized return, likely closer to just 5%.
But hey, time horizons matter, right? If you want that exact same 9% return but over a shorter 5-year horizon, you can actually afford to pay up to $49 today, assuming the market maintains its current premium on the stock, of course. However, the longer you plan to hold, the more the underlying fundamentals dictate your actual return, which is why the 16-year maximum buy price drops all the way down to $38.
To make this completely foolproof for you, here's your step-by-step entry and exit strategy. Number 1. Buy aggressively only if the market panics and the price drops below $38. Number 2. If you already own it, you just comfortably hold between $42 and $55. Number 3. If we get a huge bull market run, you start trimming your position at $58 to $62. And finally, consider a full exit above $70. This strategy entirely removes emotion from the equation, giving you strict entry conditions and crystal-clear trimming targets. Section 6. Final verdict and key takeaways. We've covered the business model, the intrinsic value, and the pricing strategy. Let's wrap all this data up into one definitive conclusion on AltaGas. Ultimately, the business quality is undeniably good, for sure, and the long-term outlook for North American energy infrastructure remains really positive. But due to weak cash flow quality right now and a slightly overvalued stock price, the final recommendation sits firmly at a hold. To summarize our findings perfectly, if you're an existing investor, you can confidently collect your dividends and hold your shares. But if you're a new buyer looking to jump in, you absolutely must exercise valuation discipline and wait for a better entry point, ideally in that $38 to $42 range, just to ensure you have a proper margin of safety. So, I leave you with this thought. Will AltaGas finally tackle its debt burden and unlock its true value, or will rising interest rates keep it anchored as a hold forever? Keep an eye on those macroeconomic shifts. I'd love to apply this exact rigorous framework to your portfolio next. We can take the emotion out of investing and replace it with pure data-driven strategy. Drop the ticker symbol of the stock you want me to analyze next down in the comments below, and I'll catch you in the next explainer.